Hey everybody, Chris Scott here, Keller Williams. Thanks for tuning in. I want to give you a quick update on the real estate market. This is, on a lot of people's minds. Of course, you're seeing all this news and different news outlets reporting different things, having different projections. Well, I'm going to tell you what I'm seeing on the ground. One thing's for certain: we're in a very different real estate market today than we were earlier this year. That's no surprise. It has shifted from an extreme seller's market all the way to what would be considered a balanced market, depending on the neighborhood you're in, which means there's a reasonable amount of inventory, and the market really doesn't favor neither buyers or sellers. I still feel like it's slightly favoring sellers in certain neighborhoods, but I also feel like that shift is happening where it's going to go into a balanced market and can continue all the way into a buyer's market. Looking at the numbers, a number that might surprise people is prices are still up year over year. So if you compare July of this year to July of last year, prices are up 4.5%, even though sales are down 35%. So 35% less sales. And if you look at 2020, we're almost half the amount of sales that we had in 2020 in July. So very interesting to look at. One kind of sobering statistic is if we look back earlier this year and we look back to March, we saw an average price of $853,000 for a residential class property. And we look at today, and that residential class property average price is $715,000. So we may be up year over year, but year to date, we're actually quite down to the peaks that we experienced with the extreme shortage of properties that we had. Now, looking forward into September and beyond, we're in kind of a time right now in August where a lot of people are away. The market is quite quiet right now. But I do believe there are some people re-engaging in the search, and I do think that in September, as long as we don't get another large rate increase, I think a lot of people are going to be looking to see what the Bank of Canada does. If we can escape that, there are reports that there is a possibility that they are going to take that down a little bit from the large increase they were projecting. If we can avoid that, then I think we can have a relatively stable housing market for September, October, November, because I think there are a lot of people on the sidelines right now that want to re-engage, but they just want to make sure that prices aren't going to fall any further before they get back into the market. So I think that is what the fall is going to look like. Obviously, hard to predict, with the market, with any type of market, but that's what I'm looking at. The good properties are still selling. The really nice presented stage properties are still selling. They're selling less than what they were earlier, but those are the first ones to go. The houses that are the sellers are trying to get yesterday's prices, those are the ones that you're seeing sit on the market because those numbers are just not out there anymore. Now, with everything going on, I am noticing that every neighborhood is different. Has different inventory available, even within the segments, whether it's a townhouse or detached. There's lots happening within each neighborhood. So if you're curious to know what's happening in your area, please reach out to our team. We're more than happy to help, and we're always happy to be, an advisor for you. Hope all is well, everybody. Enjoy the rest of summer. Take care.